Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events, based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone. It's been really a bit of an up and down week, as maybe some of you have seen. Even if you aren't in the crypto space full time, we had Black Monday across all markets. The official kind of stance is it's based on some of the economic data that came out last week. A lot of folks think that the Fed has been moving too slow on lowering interest rates. Specifically, us at Arca, we're pretty sure that a lot of it has to do with the partial collapse of what's called the Japanese yen carry trade, and specifically the Bank of Japan raising rates. So crypto saw the most damage on Sunday, particularly. Jump, which is one of the big market makers in the space, was reportedly selling their large chunks of their ETH positions, unstaking it and sending it to exchanges. On the weekends, liquidity is generally so much worse. So it was really just kind of dragging down the whole market and pushing prices down across the board. So that hasn't been very good for anybody. Also, all anyone can talk about is the election. We finally have Kamala Harris's picture running mate, and that's all been what people can focus on outside of just the price action. So that's the broad market, but we're here to talk about some tokens as always. So I will get right into it. So first up, we're going to talk about ZKX. So ZKX is a they're a Starknet-based decentralized derivatives exchange. And this past week, they announced that they're going to be winding down the project and delisting all their active markets, citing and closing all positions in the perp DEX. So the founder announced the decision on X, stating that they were unable to find an economically viable path forward for the protocol. So interestingly, ZKX just launched their token at the end of June, and it also coincided with an announcement that they'd raised additional funding to bring their total funding amount to $7.6 million. So in addition, they raised, initial capital back in 2022 from the likes of Alameda, part of FTX Empire. And so a lot of folks were a little suspicious about the timing of this funding announcement, since it and also just the the project shuttering completely within just over a month after the launch of the token, with many critics calling the project as a rug pull, having led retail investors to believe that they were still doing well, putting that fundraising announcement out there, and then having their token go live only to shutter within a month. We don't know necessarily what happened, but that is what the market is perceiving right now. So ZKX, the token, it's down 75% on this news. Okay, next up, we're going to talk about Lido. So Lido, the decentralized liquid staking protocol, announced this last week the launch of what's called Lido Institutional. So this is going to be a middleware solution that basically allows for enterprise-grade staking. So Lido has, to date, basically the way it works is that you can use their front end to go and deposit your ETH and create and receive the staked ETH in return, staked ETH derivative in return. Lido then stakes it for you within the Ethereum base chain, and provides those rewards to you back in the staked ETH form. So the way the middleware would work is basically it would kind of give institutions more access kind of overall to just this kind of data set, and institutions are usually very picky about their tooling, like oversight, compliance. So this middleware solution is hopefully something that can really solve for some of those things. So they've really been focused. Lido has been hugely focused on institutional adoption for its liquid staking product, and which makes sense. I mean, Lido currently captures about 28% of the liquid staking market, and has $23 billion in TVL. So we expect that to continue to grow. They've definitely captured the retail's attention. So why not now go after institutions who are just holding ETH? With that, Unfortunately, the market has been bringing down a lot of tokens, including Lido, and it is down 38% for the week. All right, next up, let's talk about Athena. So, during the sell-off earlier this week, Athena's stablecoin USDE was put to the test as the market basically was hit with like billions of dollars of leveraged liquidations. So USDE is kind of like a pseudo decentralized stablecoin. It's basically minted in exchange for Bitcoin or ETH. So the way it works is that user comes in and deposits their ETH or staked ETH. And then basically they either take the staked ETH if it's not already in like a staked ETH form, and put it through something like Lido, where they then have a long position in ETH and they also earn some rewards off of it, staking rewards off of it. Meanwhile, they then go and put on a short perpetual futures position that's corresponded to that ETH position. So if you deposit $100 of ETH, they go and short a perpetual future contract for $100 worth of ETH. So it's 1-to-1 balanced. So what happens there is that the protocol, and then they mint $100 of USD Ether stablecoin and give it to me, the user. So the way the protocol basically earns yield is that, on this what's called a cash and carry trade, and then it's distributed to stakers in the protocol. So they've been very, very successful with growth. A lot of criticism though, since I think a lot of the market has PTSD from the Luna and UST days, understandably. So a lot of folks have been worried that if there's any kind of market volatility, there could be a collapse in something like Athena, which is now very intertwined in the DeFi ecosystem. So one day's volatility led to $100 million in redemptions from Athena's USDE stablecoin. Yet the stablecoin itself actually only showed momentary weakness, briefly losing its peg and trading at about 0.997 before going back up to $1. So this has been really good news for folks who have been, wondering about how battle tested this really was. And despite the losses, USDE still has over $3 billion in AUM, which is very impressive. Another positive for Athena was this morning they announced they're going to be expanding to Solana via using Layer Zero's OFT standard. And basically it's going to allow for the trading of ENA on Solana and also the issuance of USDE on the Solana blockchain with the backing of Solana. So we'll see how that goes for Athena as they look to grow that $3 billion of AUM. Unfortunately, again, this one was hit really bad by the market. It's down 34% for the week. All right, last up, we're going to talk about Jupiter. So Jupiter is the Solana-based decentralized exchange. They passed a vote this past week to reduce their total supply. So the vote basically brings the total supply of the JUP token, the JUP token, which is just a governance token, from 10 billion to 7 billion, a 30% decrease. Unfortunately, though, this change isn't technically going to impact the market price of Jupiter because it's going to just it's going to impact what's called the fully diluted valuation, since the tokens that they're going to be burning are part of the locked team and community allocations. Theoretically, though, this change is still going to be bringing down the FDV from 8 billion to 5.7 billion, which is a lot more palatable for some investors. And the actual burning of tokens will take place over the course of 6 months. So we will see how this does for it. The Jupiter, the Jupiter airdrop was like very highly hyped, and unfortunately was a big disappointment to the community in terms of how it performed and how much of the allocation went to the community. This seems to have been received decently well. Jupiter is down only 21% for the week. All right, you guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific.